Well, we were following some good news on Wall Street. The stock market had its best day in nearly a month yesterday. The Dow gained 754 points and the Nasdaq is up 353, with the S&P 500 taking in 105 points. A little bit of good news. Netflix has reported its second quarter earnings for 2022, and the streaming platform lost nearly 1 million subscribers, but that's good news too, because it's a smaller loss than the 2 million it had projected. Netflix stock jumped 5.6% in trading after markets closed yesterday. And I asked you this question yesterday. I get to ask it again today. Are you feeling lucky? Well, the Mega Millions lottery has soared to at least $630 million after no winning tickets sold for the $555 million jackpot. Yesterday, that was the jackpot. Yesterday, the next drawing will be Friday, and it could be the 5th biggest jackpot in Mega Millions history. All right. Well, inflation may be soaring, but you know what else is soaring? The U.S. dollar as well. Is that good? Should we be concerned? Here to discuss the current state of the U.S. dollar is Joe Rennison. He's a markets reporter and deal book writer for the New York Times. Great to have you here. So first off, let's just give us a sense of where the dollar currently stands and how it compares to other major currencies like the euro and the yen.
Sure. So the dollar is very strong. That's the takeaway. It's at its strongest in about 2 decades when you compare it to a sort of basket of its kind of major trading partners. That would include the euro. It would include the yen as well. In terms of the euro, that's the one a lot of people have been talking about, especially last week, because we kind of hit parity for the first time in a long while. So that's where the dollar is worth the same amount as the euro. For the yen, I believe we're at roughly a sort of 24-year low. So again, over roughly 2 decades. So the upshot, the dollar is very strong.
So then how do I interpret this? What does that mean when we're talking about the state of the global economy?
Yeah, sure. So there's a few reasons why this is happening now, one of which is the Fed and how the Fed has moved a little more quickly, a little more aggressively than other central banks around the world to combat inflation and raise interest rates to do so. What that does is it makes even relatively safe assets like US Treasuries, it gives them a higher return, and that draws in capital, it draws in investors from around the world looking to earn that higher return when, by and large, around the world, interest rates are still fairly low, and those kind of coupons that you can earn, the yield that you can earn on bonds around the world is less. The other reason is that, whilst Americans might not be feeling like this right now with the sort of rampant inflation that we have and the economy starting to slow down, the US is doing better than a lot of the rest of the world. And as a result, again, the dollar becomes this kind of haven currency. It becomes this safe place for investors, for people to hide out whilst there's a lot of volatility elsewhere.
So, you talked about inflation. At first, I thought to myself, oh, maybe that's good for inflation because that means the American dollar goes further. But it doesn't really have much of an impact on inflation, does it? Or does it?
I wouldn't put it quite like that. I mean, I take the point that you're making, which is that, again, I imagine a lot of people will find it strange that we're talking about how strong the dollar is when people's own spending power, people's own ability to go out and buy things is decreasing because of the inflationary effect raising the cost, raising the price of things. We're talking about a slightly different way in which the dollar is strong, and that's in its comparison to countries and currencies abroad.
Just really quickly, if interest rates go up again, which it looks like they will that have an impact on the dollar?
I mean, it quite possibly will, again, kind of strengthening or reinforcing that dynamic that I sort of mentioned earlier, whereby US assets start to look even more attractive to investors wanting to earn a little bit more of a return. Again, and you don't have to be going into the stock market to do that. You don't have to be going into high yield bonds or things like that. You can do that just by buying treasuries.
Fascinating stuff. You've offered me some clarity, Joe Rennison. Thank you very much.
Thank you.